Righty. So our first meetup of 2026, and I'm going to kick it off with a new strategy, new approach, and we're going to be adding this to our existing strategies. I know people have been asking me to if we can use one chart for multiple strategies. So unlike some of the other future strategies, we're going to be using one chart for multiple strategies, including options. So you're going to see a lot of commonality, and it's going to be adding trades to stuff we've already been doing. And since it's adding more trades, some of the old strategies that didn't give us a lot of trade signals, we might just put those on hold. Not that they're bad, but just that we just don't have that many trades that come up valid. So you're going to be seeing a lot more trading opportunities and more profitability. So I'm going to be showing you some of that side by side with the new strategies versus compared to the old and how we're going to be adding more profitability onto those. Um, James asked, does this work for stocks also? I have never looked at it on stocks. I haven't looked at stocks in probably 10 years. I only trade futures and options. That works for us really, really, really well. We use that leverage, this 50 to 1 leverage on the futures and up to 50 to 1 leverage. So that's what works really, really well for us, plus the leverage with options. So, but no, I haven't looked at stocks literally in more than 10 years. But it works extremely, extremely well on currency futures. Extremely well. That's why we focus our energy on currency futures and also the index futures. All right. So to go here real quick. Um, for this presentation, I'm going to scroll down. It gets a little bit slow today. Okay. Loading, loading, loading. All right. So everything we're doing during this presentation is purely for educational purposes. So I got a disclaimer here. So everything we're doing is purely for educational purposes. What I'm showing you is how myself and Becky, how we profit from the markets, and but not giving any specific trading advice. So if you are working with me as a coach, then we'll go through stuff in real detail, so you understand everything. Today, since we have people at different levels of experience, I'm going to be keeping it at a high enough level so everyone can follow, understand the concept. And we're going to look at how money is made and how it's lost and a big picture rather than being tiny focused on day to day. We're going to look at big picture because you have to have a big picture outlook to know if what you're doing is going to actually make you money. Because there are good and bad weeks, good and bad days, good and bad months, but over a period of time, you should see yourself making a whole lot more than you're losing. And our goal in all of our future strategies is to have maybe in the range of a 2 to 1 to 5 to 1 return, meaning you're making $2 to $5 for every one you're losing. That's kind of our target, and that's how our strategies work. And all of our strategies are usually in that range to make $2 to $5 for every $1 lost. So that's how we set all of our strategies up. If we're not in that range, we don't deal with it. So, and historically, it has to be like that. That also gives us cushion. So if we have extra losses, we still make money. Make a mistake, we still make money because it's cushion. So understanding how much you make to lose and what to expect is really, really easy with futures if you're doing a rules-based approach. Follow the rules, and your wins will be significantly more than your losses. All right. So let's scroll down here again. These are the only markets we trade with futures. Indices, the Dow, NASDAQ, S&P, and Russell, the major indices, and these currency futures. These currency futures work extremely well for us, especially Australian dollar and euro. Those are my two favorites. If I had to pick two to trade or nothing else, it would be the Australian dollar and euro. And then right after that, Swiss franc, then British pound and Canadian dollar. But Aussie and Euro give us the absolute best results on every strategy, hands down. It's whenever trades comes up, you know I'm going to take it. You're also going to see an example of the Aussie dollar for this one strategy I'm showing today in the handout. I'm going to put the link for the handout back into the chat room again, the chat window. So you can go to there for the chat window and get the link for the handouts. I emailed that out also in the last day or two for the handout. So hopefully you got that email. All right. So these is what we focused in, and this is what we specialize in. And the more things you try to trade, the less things you get good at. So these are the things we've gotten really, really good at, and even better with the new strategies. Okay. So we're going to be looking at a strategy we call the bear attack one. There was an older bear attack, um, and this is bear attack one. It's an evolution. So the strategy we're going to be showing you today, and I'll be going to the live charts in a moment and going through an example, is something we used to do when we traded Forex. And I just kind of, and when we traded Forex, Forex trades were literally 90 something percent wins. Okay. Standard, it was always 90 something percent wins, but with a little bit different trade management. So what we did was take the Forex strategies and just sort of tweaked them a little bit so we can, and with a plus added on some new knowledge and applied them to both options and futures, currency futures and index futures. So next month, I'll be showing you some of how we are using this new strategy and new approach on index futures. This month, I'll be showing you the currency futures. For people who are current coaching clients or soon to be coaching clients, you will be getting all of the details for all the new currency futures trades within the next week. So you'll be getting the updated trading plan, all what changed, what evolved, all the stats, all the new everything for the long and short on the currencies, and y'all will be getting that in the next week. So stay tuned for that. If you're a new coaching client after today, then you'll be getting all of this, and next month you'll also be getting the new index futures strategies in addition to all the old ones. So it's a lot of stuff coming up, the new stuff. People have been asking me for this for a while. So I finally put in the time effort to take the old strategies, tweak them a little bit, and make them available, and you will see a difference in profitability. And I'll show you side by side how that works in a little bit. All right. Is there anyone who does not understand basic candlesticks before we move on? Because we'll be doing everything with candles. Just feel free to unmute and ask any questions along the way, or if you have anything, just type in the chat window and I'll see it there. But don't raise your hand if I won't see a raised hand. But ask any questions about anything whatsoever. What we're doing now is applicable for beginner traders or more experienced traders who just want more, who want some consistency. Experienced traders who want to add something to their trading that they can generate regular income on. And what we're doing now is not an introduction, so to speak. I'm showing you how myself and Becky trade every day, every week. This is the end game, and I like to use that word end game. This is after years and years, tens of thousands of hours of development, of analysis, of actual trading in real life to make this work. So this is our end game. We're not showing you, okay, do these steps and maybe you'll get, no, this is it. This is, okay, if your goal is to sit in front of a computer day trading, looking at charts go, lines go up and down every day for hours and hours, this is not for you. This is swing trading. This is 30 minutes to maybe 40 something minutes a day. Okay, you put your trade on after the market's open 23 hours a day. When the market opens in the afternoon, some point in time, you put your trade on and you go live your life. You put an entry target and stop loss, go live your life. So it's our end game. We used to sit in front of a computer for many, many hours day trading back in the day because we didn't know any better. A lot of people start out that way. They don't know. Everyone starts out day trading. But like any other job, as you work there longer and longer, you want to do less work and make more money. And that's what we've done. We do a lot less work and make a lot more money by swing trading and only taking minutes a day rather than hours a day. And we all have lives, we all have things to do, and we can't do the other things in life and enjoy those things if we're sitting in front of a computer. So that's a big part of my reality is I do so much stuff. I did give up my full-time engineering job back in 2009 to be able to trade for a living, which meant less than an hour a day. But that gave me time to do all other things I love doing. So I train in Brazilian Jiu-Jitsu. I'm a city official in Santa Clara. I work on films, acting, and stunts. Um, and I just get involved with different things in the area, whatever comes up. Some stuff pay money, some don't. I had never planned on coaching people for this, but I teach kickboxing class. So I've been doing that for a long time. But I'd never planned on coaching traders until about 2014. So here's how that happened. I used to do 2 or 3 times a year some workshops for presentations for the local trading groups. And then in 2014, one person came and approached me and asked me if I could help them, coach them. I'm like, I'm not looking to coach anyone. And but he talked me into it. And then the word got out, and then other people started contacting me, and then I'm like, okay, now I'm picking up a couple of people helping them, and then they said, can you do a monthly meetup? I'm like, I don't want to do a meetup, but then they talked me into doing a meetup, and then now more than 10 years have gone by since I've been doing meetups, and um, so I do everything one-on-one. And the reason I do things one on one is because people learn differently. And I might have to say the same thing to one person 3 different ways for them to get it. Everyone picks up different things differently. So I really like to work one on one. And so I only take on maybe 2, at the most 3 new coaching clients each month. Since it is one on one, I want dedicated time. So we schedule sessions um, based upon mutual available time. So everything's one-on-one. That's why it works for us. So if you have a problem, you call me, email me, meet me in person. I'm very available if you're in the Bay Area to meet in person also. All right, so I'm going to switch over to the live charts and then we'll come back to this, okay? I'm going to change the share. Remember, along the way, ask any questions you want. And let's see, changing the share to the chart. Coming up now. So we'll go through the strategy first, and then we will take a look at some of the numbers. Um, so what you're seeing on screen is a chart of the Australian dollar. Anyone who's been working with me for a while is familiar with the super trend indicator because we use it on many, many, many charts. It colors the candles red or green, giving it a directional bias. The indicator itself is readily available if you go searching for it, but how you set it up is up to you. What numbers, values you put in is up to you. How you choose to utilize it is up to you. I can visualize this in many ways. Back in the day, we used to use this as a trailing stop because it would put a line above this showing me that as long as it's in a bearish move, there's a little hash mark right above each candle, and I could use that as a stop loss. So if it goes up above that line, it's a stop. It gets stopped out. Um, but how we're using it is giving us a support and resistance. So from a let's say we're using like let's say this level here was our last level of resistance before we had this bullish move up in green. So what we're doing is using this high here as our new level of support. So when the market comes back down below this level, this red candle, when the market comes back down below this, the high of this red candle, we're going to call that our trade entry short. Yeah, super trend. Super trend. Van, are you back with us? Are you back in trading or just are you back? I haven't heard from you for a
I'm
while.
I'm back.
Good.
I'm back. I'm gonna give you a call this week.
Cool.
I'm gonna have a meeting with you.
All right. Still meet me at the same spot at SCU.
Yes, sir.
Cool. And you'll like the new stuff. We'll go through it in detail and I'll give you the update on some of the index stuff too, because it's really nice. All right. So that's our concept. It's going to be a similar concept on the long side, but how are we dealing with the short side? And it's not like every transition is going to be a trade. Okay. Here, this would be a valid trade. I just one I used in the handout. But these volatility bands, upper and lower volatility bands, we're looking for an extreme move higher. So yes, this is the last red candle. And now it becomes support after we get the bullish breakout above it. But we're not going to look for a trade below this red high unless we get an extreme move higher, a couple of standard deviations higher, and then reverse down. So we're looking for an extreme move higher, then a reversal down, and then we're looking for a trade signal, a red candle coming below this level. So we look for this red candle, then it goes green, then it goes red again. Okay. So this super trend, how we're using it is to identify dynamic support and resistance, and then capitalizing on that. Like I said, this is stuff we used back in the day with Forex, but well, I went back and looked at some of the old strategies, and I could revive this. I could bring this back for currency futures because it works really well in futures. As far as stocks, I don't know. I've never tried it. It's something you might be able to try for the person with the James, I think. You can try it on stocks, but I've never looked at it on stocks. So, but the concept, this was previous. Once it goes above this red candle, and you got the green breakout. So now we have this now becomes the support level. It goes to an extreme up in a couple of standard deviations. We have two volatility bands here. Then it reverses down and comes back below this level and with a red candle. That is our sell signal. We also have some sells with using this line here, but that's not part of this particular strategy. Okay. This happens over and over all the time. Red candle, then it breaks out and goes green. Multiple touches closes above the volatility band, and then it starts moving back down. Once we get below this level here, here's the red candle. Just look at the white line right across. Here is our signal day. This is the day we close below that red candle, top of the high of the red candle. Here's our trade signal short. Okay. And it has to be a certain number of days, and that's all gone over. Like here, I only have 2 days, not enough. If you don't have enough days, you get like fake signals. This is actually a good trade, but we would need more than 2 days in between, and it didn't touch the upper band. Here, perfect signal. Here's our red candle. I'll break out above it with the green candle. Okay. Here is the high of the red candle. Just use the cross here, right across. We close below that high right here with the red candle. That's our trade signal to go short. Okay. And this happens over and over again. Now, we're going to pick one of these trade signals, and we will be going through the detailed um, analysis as far as entry, target, and stop loss. So you see how we do that. But before I do that, I want to go through with you how money's made, because some people don't really appreciate the big picture. Some of you have seen this on on previous recordings. You might have seen online. But I want to go through this with you, and so you can see how money is made, and with the new strategies versus the old strategies, and how they um, would add to existing profitability compared to what we were trading before. So I'm going to switch over. Like I said, along the way, ask any questions you want. Just got to get this loaded up. Let's see. I'm just kind of slowish. And one of the best parts about trading the futures is we have micro futures. They came into being around 2019. So with the micro futures, it's 1/10 the margin. So even if you have like a small account of a couple $1,000s, you can still trade it very effectively even with a small account. So that's the beautiful part about you trading with the micro futures. It's about percent return, and that's the main thing. It's all about percent return. So the same way you can trade with a $5,000 account, you can trade with a $50,000 account, you can trade with a $250,000 account, is the exact same trade. All right, so I'm going to go through some of the numbers, and then I'll show you the difference between um, the old and the new, and how the new trades make a difference. I'm going to switch the share. So some of you have seen some of this before, but let me go through it so you understand the old and the new now. Should be changing over. Did the share change yet? Okay, should be seeing a spreadsheet now. So you're going to be looking at two sheets on this spreadsheet. A while back, I asked Becky to go back at least several years to list out all the trades all the strategies we use. And generally speaking, we expect, if you want the best results for everything, you keep your risk approximately the same on every trade. If you're going to risk $1,000 a trade, you risk around 1,000 on every trade. This way you can actually put together a plan and have expectations of profitability, how much you're going to make and lose. So for this, we went with the example, you're risking $1,000 on every trade, and we took from our trading plans the worst case scenario, where you're getting out with a high probability profit target. But when you take a look at our actual plan, we give you 5 different profit objectives for the first target, depending on how aggressive you want to be. There are conservative targets that give you a very high probability of success, but it's a smaller dollar amount. And there are mid-size and bigger dollar amounts, but with a lower percentage of win. But in any case, we don't do anything less than 80% wins and realistically we average about 85% wins realistically. Okay. Well, let's take a look at 2019. January 2019. So we have every month of every trade that's been valid with our existing strategy since 2019. And the trades actually go back all the way to 2003. That's our full history from 2003 to now. So anything has to be back tested, has to look good, and also has to be forward tested. So we actually have to trade it to make sure it actually works. Just because something back tests well doesn't mean it works in real life when you trade it with real money. People don't always understand that, but you learn the hard way real fast. You got to actually trade it to know it works. So we've already done the hard work. We've done the lifting, heavy lifting. This is the end game. All right. So let's take a look at 2019, January. These trades were valid. And let's say you were one of the people that started out trading with us this month. You would not be happy. Most of the trades you placed ended up being full loss. You're risking $1,000 in every trade. What 257 means is a 25% return on that first trade. 500 means a 50% return at the first target, 48% return at the first target. This is no trailing stop, just all in, all out with the first profit objective. That's what this means. Okay, with the old set of strategies, this would be January. Okay, pretty straightforward. But you're with but it's a net negative. But you didn't lose much. In the big picture, it's not much, but people freak out, and they lose confidence. This is why I try to explain to people all the time, and you'll hear me say these words over and over again. Every year, we have 80 something percent wins. You will have 2 to 3 losing months every single year. As long as you're consistent, following the plan, you will have 2 to 3 losing months every single year. That will be negated by 2 to 3 winning months every single year. That means your profits for the year will be reflected by the additional 6 to 8 months of winning trades. Okay. So you just because you have a bad month, you can't stop. You can't lose faith in the system. You can't lose faith in your coach. You have to follow the rules. I'm not making any mistakes. That's why I review trades with people. They want me to go over their trades to make sure they're not messing up. I go over trades with people each month, make sure everything looks good. As long as you have a valid loss, that's perfect. Valid loss is good. No problem with that. It's the losses that are mistakes. If we try to get rid of those early on, as long as you have your stop loss in, you're good. Okay. So not a great month. You're starting out and you're like stressing. It's like, I don't know, I'm not sure about this. The next month, wow, that's, and this is based on a 25 grand account. Also, you're risking 1% of 4% of the account. 4% of a 25 grand account is your risk on this. Max risk 4%. Ideally speaking, your risk is 2 to 4% on every trade. No more than that. You risk 2 to 4% of account on every trade. And when you're starting out, maybe 1 to 2% of account on every trade starting out. But once you got the routine down, it's 2 to 4% max risk per trade. This way you can never have a big loss because you're only risking 2 to 4% of the account and you can recover that quickly. Okay. After 3 months of trading, you're well into the plus range. You've already made more than you lost up here. So now after 4 months of trading, still positive returns, all net negative, excuse me, net positive for the year. And this started out bad. And you're going to be thinking this is awful, but you got to keep trading. All right, keep trading, keep trading, keep trading. And you go on all the way through the end of the year. And this is for the old strategies. This is what we've been trading for years. When the year is done, what's the percent return for the year? It's a 36% return for the year on the account. When you may not have thought that when you started out the year with a bunch of losses, but as long as you're consistently trading and with the trade management we show you and the risk management, when the year is done, 36% return. Okay, that's all the old strategies. Now let's look at the new strategies. The new strategies is like what we just went over on the chart, long and short. So here is the new strategies. For the year 2019, these are the additional currency futures strategies that were generated for the year. Okay. And it created, just with the new strategies, same 25 grand account, risking 4% per trade, it created an additional 13.8% return on the account. That 13.8 is in addition to this number, this 36. That's what I meant by the new strategies, additional profits. Okay. So this is the old strategies that we've been trading. This is the new one, the bear attack 1, bear attack 2, and the bull run. These are the new currency future strategies we're trading. All right. So that's the difference. These are the added trades, the new strategies created, generated, and these were all based upon, like I said, that Forex strategy that we adapted to currencies, futures, which is basically the same thing. The futures and Forex, they're kind of pretty much the same thing, except as we have a lot more protections with futures than Forex. I don't know if some you're all familiar with it, but probably about 12, 20, 11, 2012, 2013, one of the big Forex companies shut down and the owner basically ran away with the money. So literally ran away with the money and there were no protections. I know people, we know personally know people who had all of their trading funds with that company and they lost 90 something percent of it. After several years, they were able to recover maybe 10 cents on the dollar after lawsuits and criminal stuff and going on. And so that's the benefit of futures over Forex is that you have a lot more protections and you can trade with a US based company where you have all the regulations and protections. So we like that much better than Forex for that reason. You get the same type of trading, same great results, but a lot more protections, and you don't have to worry about someone running away with your money overnight, which actually did happen with that Forex company. If you want more about that, email me later and I can send you some links. All right, so that's 2019. 2020 was my most profitable year of trading, COVID year. I had nothing else to do, focus on my trading. Didn't have any real work, focus on my trading. 2020, great year of trading. These are the old strategies in 2020. You can see the percent returns each month. I don't think we even had do we even have a losing month? Yeah, we had a slight losing month. That was in August. We only had one trade and it was a loss. That's the only reason. But okay, two losing months and October. 59% return. That's the old strategies. And once again, consistency. You will not be in every trade. No one's going to be in every single trade. That's unrealistic. So you won't be in every trade. New strategies. 2020 added another 5.5% to that number. So here were the additional trades generated with the new strategies, the new currency future strategies, an additional 5% return. We can go to 2021. Once again, same type of thing. Great returns every month. They just keep placing trades, book profits, book profits, book profits. Try to not make too many mistakes. Not every month has a bunch of trades. We don't rely on volume of trades. We rely on quality trades. End game. Quality trades, not volume of trades. Okay. You take what is valid. End of the year at 4% account risk per trade, 67% return. If you were only risking 2% of the account per trade, this would be a 33% return, 33.5% return. If you're trading nothing but the futures, 4% account risk is fine. If you're trading other things in addition to futures, then you may have to pull your percent risk per trade down because you need to have capital available for other things you trade. So everyone's going to be different. Everyone's going to be very different. Okay, so 2021, 67% return on the old strategies, which current coaching clients have. The new strategy, 2021, generated an additional, let's see, 2021, an additional 22% return. So for 2021, with the additional trades from new strategies, we created an additional 22% return. So that 22% return is in addition to the 67. So 67, 7, 8, that's 80. So that would be an 89% return total for the year with the additional trades that would be generated with the new strategies. And it's the same type of thing we go through each year. That's 24, 40%. Every year is 24, 39% return. Let's see, we have, 2022 with a 32% return for the new strategies in addition to what we had. 23, 6% return in addition to what was valid there on the other. And that was a 19% return. So in addition to this 24th, this was 19% in addition to the 39. So that gives you a feel for how the new strategies increase profitability. I said it'll be new for the current coaching clients and new for the new coaching clients that I might be getting after today. but it's not new to us. We have y'all don't have any idea how many strategies we've traded in the past, and they're all good strategies. The difference is we use Becky still uses it for some strategies, but we used a software package called Profit Source, and Profit Source costs between $2,000 and $3,000 plus a monthly fee to use it. That was not something we could ask coaching clients to purchase and use. So we had to change the strategy we were using in a way so that anything you're seeing is stuff we used to do with that software package because the scans were a little more elaborate. So we had to took a while to be able to, how can we still trade those strategies but translate them to a way where we can do review of them really quickly manually. And that took a while, but those strategies work really well. And as we do that, coaching clients will see those come to life and be able to trade them. All right, so to go back to the chart real quickly, I'll even switch it up a little bit. But that's the concept and that's the profitability. Um, and let's take a look at actually making money now. I know some of you have more experience than others, but let's take a look. Let's take this one, which is 1, 1, 2, 3, 4, 5. All right. So actually, that's a good one. It's actually good. Do the one that's in the handout so you can actually follow it later on. All right. So someone write this down. The high of this candle is also on the data box on the side here. The high of this candle is 0.6714 and 10 ticks above that is 0.6724. So, so listen to me, the high of this one is, let's just keep it 0.6714. So we want to close below 0.6714. So the first time we get a close below with a red candle below 0.6714, we just do 14, the 24 comes in, will be on this candle. So we're looking for close below this high. This close happened on 5/11/23, the example we're looking at. Okay, that is what our setup is. Our setup is very visual. I use setup trigger trade management terminology I got from Jake Bernstein. Learned a lot from Jake. Been in his meetup group since 2009. I was member number 3, and I took over that group eventually. Um, so stop loss will be 10 ticks above the high of these 2 days. So now the stop loss is 10 ticks above this high. That high is 0.6828, so the stop loss is 0.6838. Write that down. Stop loss is 0.6838. 10 ticks above the high. Stop loss 0.6838. You can enter that, and I think Becky's entering some stuff. So Becky, if you want to go ahead and enter that. Stop loss 0.6838. That's 10 ticks above the 2-day high. So here is the signal day. We're getting our trade signal. And our entry for the trade is 10 ticks below this low. The low is 0.6697. So the entry is 0.6687. 10 ticks below the low. Entry 0.6687. So we have our stop loss up here. Our entry is below. We always use buy stops and sell stops on trades because we do not get short a trade unless the market is actually going lower. So when the price goes below that level, it will enter the trade for us. If we're going long, when the trade goes above a certain level, it will enter the trade for us. So that's how we use buy stops and sell stops, or why we use sell stops, buy stops to enter trades. Much higher probability for a good trade in our direction. Okay. So now we're going to determine the difference between our entry and stop loss. How many ticks is that? So Becky, what is the difference? Or if anyone wants to do the calculation, that's okay too. She typed it into the chat window. So our stop loss is 0.6838 and our entry is 0.6687. What's the difference between those two numbers? What's the difference between 0.6838 and 0.6687? And Becky wrote 151. That's 150. Oh, Olga has 141. Who's correct? 141 or 151? Anyone want to update their number? Who has the right number? Let's see. I thinking Olga, you off by 10? Olga, I think you're off by 10. So 6838 to 6687, not 97. So it should be 151. So 151 ticks. If I'm wrong, let me know real quick. 151
Yeah, you're
ticks.
right.
Okay.
I am off by 10 that way. Yes.
All right, cool. All right.
Wrote down the wrong number.
How you been doing these days?
I'm doing okay. I'm gonna try to get back with you, and these new charts are new to me, so I need to
Yeah.
get caught up.
Cool. And they're new to everyone, so it's okay. You're not the only
Uh-huh.
one. I'll be meeting with everyone one-on-one who wants to learn the new stuff and maybe do a special session just for the coaching clients.
So these are Bollinger Bands, and what are the dots?
It's our standard, the dots are different Bollinger Bands. So they're all different Bollinger Band settings and values and standard deviations.
Okay.
And the yellow lines, it's a Donchian mean, but we have a couple of different Donchian means and a couple of different Bollingers. So same concept. You're gonna have two or three like three different charts, but they all look alike with different values.
Okay.
Cool. All right. So 100 now. I chose Australian dollar for the example because it's easy to do the calculations. One tick is $1 for a micro or $10 for a full-size contract. So we know our stop loss is 151 ticks. Let's say we're trading a smaller size account. And so we know that on one contract, if we take a loss on one micro contract, we will lose $151. Let's say we only wanted to risk $1,000 on the trade, or approximately $1,000. How many contracts can we get? Anyone put in a number. If we can lose $151 on one contract and we want to risk no more than around 1,000, how many contracts can we get? Feel free to type in a number. Anyone want to volunteer a number? Six. All right. So six times that's about a little over $900. That's fine. So six times 151 is 600, 300, that's 900, $906. So both Becky and Olga said six. So if I got six contracts and I took a full stop loss, a full stop out, I took a full loss, then I would lose $906. Okay? Full loss. So go back to the chart. I get in with six contracts at $151 risk per contract. If this was a full-size contract, then you'd be risking $1,500 per contract. But with the micro, you can go smaller and you can do a one lot. You can be that one lot guy because you have a smaller account and risk $150. No problem. That's okay. That's how you learn and get bigger and bigger as time goes on. Now, we know how much we're risking. We know how many contracts. Now, let's get a first profit objective. I know that we can choose a ATR target, or we're going to go right in between. We're going to take a 50% profit target because I provide stats for what if our first profit objective is half the risk, 40% of the risk, or 45% of the risk? What are the probabilities of the target getting hit before being stopped out, and what's the overall profit to loss expectancy? That's provided in every trading plan, expectancy. How much do we expect to make? If you only expect to make $1.20 for every $1 you lose, good luck with that. That might sound really great for big, huge institutions who trade in billions and billions of dollars. So that return is great for them. But for you and me, we need to have a much higher return than that. That's why we expect to make two to $5 for every $1 lost. That's how we need to be able to make money. So we have room cushion for errors and everything else to guarantee we make money. And also, we also have to give a percentage of our profits to the government for capital gains. So we need to make enough to keep everyone happy, keep the government happy, keep us happy. All right, so we got to deal with reality here. All right, first, 50% of 151 is what number? How much is that in ticks? 50% of 151 should be an easier number calculation. Someone type it in. 50% of 151. 75. Cool. All right. So we have our entry price is it's in the thing window. 0.6687 is our entry price. We have our profit objective is 75 ticks below that. So we're getting in down here, and 75 ticks below that is going to be our first profit target. And our stop loss is up here. And we know how many contracts. We actually know more than the majority of traders out there. We have an entry, we have a target, we have our risk set, we have our stop loss, we have everything, number of contracts, and that is literally all you need for the trade. Probability of success is going to be upper 80 something. And when you see our trading plan, it'll have all the information for you. So you can make a decision which target you want to trade, which percentage, so that's all provided to you, and we update that every 3 months. With the new stats. So Becky, anything you see in rectangles with numbers and stats, Becky does all that. I do not write anything in little rectangle boxes. Becky does all the stats. She maintains everything. She tracks all the trades. She does so everything you see in boxes and spreadsheets, Becky's actively working on that to create that. So we cannot do this without Becky. We cannot trade our strategies without that information, that knowledge. So she makes all this work for us. So we complement each other nicely because I do the presentation she doesn't want to do, and the stats I don't want to do. But together, this works really well for us. So it's good to have someone else you can work with, bounce ideas off of, and who can double check your work so you're not by yourself doing stuff. It helps a lot. I have people who email me their trades every day to double check stuff. I'm like, cool, yeah, matches everything we're doing. So it's good to have someone else to work with and not just by yourself. So a community is nice to have. All right, so now our entry price. So what is our actual target on this? So if the entry is 0.6687 and its target is 75 ticks below that, what's the actual price on the chart for the target? 0.6687 minus 0.0075 is what? 0.6687 minus 75 ticks. Can you type that in? 0.6687 minus 0.0075. Okay, Becky has 0.6612. Okay, so that would be the first profit target. Let's see when we get there. So you're getting in somewhere right about here, 10 ticks below the low. On this day, we went looking at the chart over here. It went as low as 0.6644. So the target was not hit on this day. Didn't hit there, didn't hit there. The low on this day was 0.6636. So target still not hit because the target is 0.6612. On this day, the low is 0.6612. On this day, the target got hit. So it took 1, 2, 3, 4, 5 days for the target to get hit. Okay. Target is hit here. And when when we were back here after the close on this day, we just put an order in. It put our entry. It said sell stop, 6 micro contracts at 0.6687. GTC, good till canceled. When that trade executes, then it triggers a one canceled other bracket order in the bracket order, it says, okay, when that first trade triggers to enter then create a bracket with a target and stop loss. And in that new trade, it will say, whichever one gets hit first will cancel the other one, but either the target of 0.6612 or the stop loss of 0.6838. Whichever one gets hit first will cancel the other one. The target got hit first here, so that it cancels the stop loss, and all they do is book profits. It's going to be a 50% return. Okay. Um, okay, let's get some exact numbers here, because our risk was actually $906. What is 75? And our target is 75 ticks. What's 75? And it's $1 per tick for a micro. What's 75 times 6? What's 75 times 6? Someone type it in.
50.
450. And we're risking $906. 50% return. That's your 50% return at the first target. All right. As long we don't trade anything less than 75%, excuse me, less than 80% wins. At 75% wins, we make money, not a lot. At 80% wins, we make good money. At 84 to 85% wins, we make a lot of money. And we average in the 80 to 87% on whatever we do. So as long as you're consistent, we make really good money, okay? Because you can recover from losses fairly quickly just by being consistent. 2, 3 of these trades wins offsets a loss. That's just first target. This is not trailing stops. This is not profit maximizing. This is just purely all in, all out. If you want to make more money, you can trail stops. After this target is hit, remember your entry was up here, so you can actually put a stop loss in and trail the stop down and capture more profits if you want. It requires more work. In a market like this, there's a buy side, a similar type of trade, not exactly, but similar trade. You get in up here and you filled, targets hit, and a move like this, it keeps going higher and higher and higher, and you keep trailing your stops up and up and up. And you can on remaining contracts, you can make a lot more. So moves like this is where a trailing stops really pays off. Or you can just take your first target profit and be happy with it. So this chart only shows, the spreadsheet I showed you only shows first target profits. If you want more, everyone will trail stop differently, but we can only predict the first target. That's why the spreadsheet only shows you first target. That's all we can predict. After that, everyone's on their own to choose which type of trade management they want to do to trail stops, and I go over different ways to do that with you during coaching sessions. All right, is there any question about this approach as far as the visual on the chart? I'm gonna change like Swiss franc too. And this platform is NinjaTrader. It is free to use. I put this one into the red candle, extreme move up, a couple of standard deviations. On the way back down, we closed below this high of this red candle right there. That's our trade signal. This would be a trade signal if it had touched the upper bands. Otherwise, this could just be chopping sideways. So we eliminate the sideways trades like this. This is just chopping sideways stuff. We eliminate the sideways trades by it has to go up and then come down with that red candle, and that tends to work for us really, really well.
Yeah, clue is the distances between when the Bollinger Bands expand and when they get shorter, that tends to, less apart, that tends to give you a clue that you're in consolidation. And so you can kind of visualize,
Yep.
when you should not trade during consolidation because of the narrow bands.
And also, You're gonna see situations like this where you got a red candle, it goes up above the bands, but I'll be going over with each person. There are very set rules for how this candle has to form above or below this level. Like this would not be valid. And also the squeeze histogram is going the wrong way. So the squeeze is valid, is part of that also. So there are going to be, it's very rules based, as you all know, work with me. It's very rule, I do everything rules based. This would be good. Red candle, boom. Sell stop, order not filled within 2 days. Cancel the trade. All of our trades usually have to be filled within 2 or 3 days. And then you just get out if it's not filled. There you go. Red candle. And there's a certain number of days that criteria has to be met, or else it becomes a choppy deal. And it also has to be filled within a couple of months. Like this is only 2 days, not enough to give us, and plus it didn't touch. So very rules based, but once we find our scenarios, then it works extremely, extremely well. Let's tighten that up a little bit so I can see what's going on. Okay, here we go. So like right here, red candle, trade right here, red candle, trade right here, red candle, trade right here. Just the top of the red candle, line goes straight across. We got our valid trade signal. So you can see it even clearer. Top of the red candle, line goes straight across. Right there is the day it closed below. And our stop loss is up here above this candle. And we enter the trade here. And a week or two, about a week and a half later is when it drops. And but like I said, all you do, we look back. All right, we saw green, so it goes red, green, red, red, green, red. That's all we're looking for. Red, green, red. The green touched, and it closed below that high from over here. Close right there. Okay, great. We have a trade signal. So what you're looking for each day, oh, there's the red. Did it close below? Nope. No, nothing to do. Next day, did it close below the red? Nope. Next day, did it close below the red? Let me check. Oh, it's pretty close. Let me see. That high is 747 and the close is 749. Nope, it did not close below. Next day, boom, it closed below. That's our trade signal. We have our stats. It's 88% wins when we take this trade. 10 ticks below the low. The stop is 10 ticks above the high. Exact same thing. Place your order, walk away, go live your life. Calculate a number of contracts with the calculation we just did. Just a routine. So for the people who are existing coaching clients, it's all the same trade management. Nothing's changed. It's just and we're going to be using the same approach for some options and for futures, same chart with some just different values. So very same type of concept. All right. And went against you for a day or two and then boom, drop. Right. So it's pretty straightforward. Like I said, next month I'll be going, 2 weeks from now, I'm going to be going over an option strategy using the same chart, slightly different approach. We'll be using the Danchin line for the options trade, but it's exact same chart. So that'll be in 2 weeks from today. I'm going to switch back to the handout and show you what's on there. And feel free to email me, call me if you want to go over anything also. Ask questions. So that's the example. I just use the second chart in the example. I'll show you the Swiss franc. I put an example in of Australian dollar from 2003 through 2025 to show you just how many trades get generated during a period of time. So, and it's very consistent with the percentage wins. I said Australian dollar is one of my favorites to trade because it's very consistent. You trade it and you make money, basically. But you got to be consistent. You can't pick one, choose. You can't. There's no picking and choosing. If a trade's valid, make every effort to get into the trade. The one trade you decide to pick and choose might be the loss, and another one you decide to pass on becomes the win. Once you're consistent, you don't know which will be the wins or losses. Just be consistent because you can go like literally years without seeing a loss. Then a couple of wins pop up, and then see what I mean? So but it's been very consistent. And this number is true for every one of our strategies on Australian dollar. Even took all of our strategies on Australian dollar, it's the same percentage. This is just for the new stuff. This is just the new strategies. The old strategies is also 85 to 87% on all of them for Australian dollars. So it's a lot more than just what you see here. This is just the new strategies, um, but very consistent Australian dollar. So this is something you can reference if you're working on stuff. If you want to work with me on this, let me know by this Thursday. I have on my website the detail for everything. But it's basically $250 off the futures trading program. If you want to do the options, 250 off. If you want to do both, I'll take 750 off. And it's all one-on-one. I don't do group things because, like I said, I like to. Everyone learns differently, at different pace. So let me know, and we can work. And I'll work with you. I like to, if I would like to work in person, if at all possible. Otherwise, Zoom, because we all use Zoom now. So this is all summarized here, exactly what we do. Although I said 10, we actually have more than 10. And as we develop more strategies, you get the strategies. If I develop 3 more strategies next month, it's included for that first year includes everything, actually a year. Any updates we do, you get it for a year. Okay. So trading plans, we update every 3 months. Historical win losses, we update every 3 months. And when I say we, I mean Becky. Position sizing, profit maximizing. I'll show you this. What we did today was, it's not any more complicated than that. It's literally that simple. Okay, for the first target. Beyond that, if you want to do trailing stops, that requires a little more work. There is more profits, but it requires more work. But this is, like I said, for new people. I will handhold you. I will take you through step by step. Whether you have a small account or a bigger account, it doesn't matter with the currency futures. We can work with you. If you have a bigger account, and index futures will work well for you also. I'll be showing index futures and new stuff next month. 6 months of guided support. But realistically, as some of you already know who've been working with me for a while, I don't limit that at all. It's like, well, if you need help, just let me know. If you want to meet, I'll meet. Not a big deal. Um, and we'll review this each month. If you need me to review it weekly, monthly, whatever you need. There are people who email me a couple times a week. I check out their trades and see what's going on, and it's okay. And call me, Zoom or email. It's all good. I'm very available. Okay. I don't have quote unquote office hours. I work with people all around the US, all around the world, even in Germany and Dubai. Okay. So it also has a weird hours for me, but I meet with people and work with them on the same exact strategies, options, and futures all over the world. They trade the US markets, they trade through Schwab or whatever broker they use, and same thing all over the world.
You changed your telephone number. Does
Yep.
that mean that you can be texted now?
Yes, you can text me. Yes, after all these years.
Yes. That's good. I'm glad about that.
Yeah, so I texted you this week, but yeah, I figured, okay, yes, for all the people out there, I scrapped my landline last month. I did an evaluation and I was like, okay, it's time. And plus, I could get a new phone without having to pay a bunch of money for it because I was walking through Target and they're like, hey, you want a new phone and a new service? I'm like, well, what do you have? All of a sudden, half an hour later, I'm walking out with a brand new phone and service, and they lured me away from Verizon and they got me at AT&T. I was like, they made me a good deal though. And I was talking to the guy who was selling me the plan. He's also a martial artist. And he showed me his videos of him doing Muay Thai, and I was showing him my jiu-jitsu. And next thing you know, he gave me, the deals. He took all the extra fees off because he hooked me up as a fellow martial artist, so I couldn't go wrong. It was perfect. All right. And if you want to do the options and futures, this is the normal price, but I'll take 750 off of that. Is basically the two things combined, but I'll take 750 off of this. If you want to do both, just let me know and we'll set it up and we proceed as needed. Whatever the initial setup is, usually 1 to 2 hours to get the the chart set up, computer set up, everything set up. Whether you're using for futures, we really want to use NinjaTrader. It's free to use. You can trade wherever you want, however you want to trade, whatever broker you want to trade with. But the analysis is being done on NinjaTrader. If you want to do it on different platforms, it'll be up to you to get those charts available somewhere else. But NinjaTrader is free. I just hand it to you, load it on your computer, load the charts up, all free to use. And it's actually pretty easy once it's loaded up. That's our day one, first session. And then I meet with people 1 to 2 hours each session, whenever it is. It could be 11 p.m. at night. It could be 7 a.m. in the morning. It could be 9 o'clock in whenever it is. Everyone's different, different schedule, different places they live and work. So we'll set something up. The only time I don't do sessions is Saturday. Saturday is my day. Saturday is the day I get to sleep in. Saturday I go to jiu-jitsu and train, and then I kick back in the afternoon. So Saturday is the only day I don't work, so to speak. Other than that, I'm pretty flexible each week to do whatever's needed to meet with people. And I do one-on-one all the time. So just call me, email me. Let me know before Wednesday, oh, excuse me, before Thursday. Use my email. My new phone number is available to you. You can text me at that number also. If you want to talk, I like to talk with people before, so make sure everyone has realistic expectations. I've had people tell me, oh, they expect to get a 500% return. They expect to have a 100 grand account. They expect to make a $500,000 each year from that account. I'm like, no, that's not realistic. So we need to get realistic expectations, and then how can we achieve those realistic expectations? But if you have outrageous expectations, someone has to tell you it's like the only way to do that is by literally by gambling your money away and hoping for the best. And we don't do that. We do everything business-like approach, rules-based approach. Once we follow the rules, it'll be just like the spreadsheet I showed you with the numbers, percent returns. That's by following the rules. You're gonna have your losses. It happens. That's just part of the deal. But as long as you're consistent, you get through the losses and you're gonna get back to winning ways. Just like I said, you're gonna have 2 to 3 losing months a year, offset by 2 to 3 winning months, and the rest of those months, that's your profit. But you have to have that big picture viewpoint, because as humans, we see everything like this, what's in front of us right now. That includes day-to-day life, that includes politics, that includes everything we see on TV is all focused on now. But when you look at the big picture and really think about it objectively, it's like, wait a second, I'm taking a couple losses now, but let me give this a chance. And this is, hey, listen, this is going, I haven't had a loss in months. And you just all of a sudden making money. So anyway, that is all I have for today. We're going to be meeting up again in 2 weeks, and we're going to go over one of our option strategies. And that option strategy will be based on um, the same chart, a little bit different approach than what you saw today, but the exact same chart. But with that same chart, we utilize it in different ways. Um, So that's be interesting for some of you to see, but that's what people have been asking me for. How can we use the same chart for multiple strategies? Because we have different charts for different things. But now, once I got this strategy back up and running for the currency futures, I looked at, we can also use this for options. Let's never looked at it. And James, if you want to look at it for stocks, that's something you can also research on your own. It might be a different setting that works well for stocks, because I've never looked at it for stocks. But that's something that you can research. But once you know how to implement the strategy in the first place, then you can actually look to what else can it be used on. Like I said, I've not looked at it for intraday. I've not looked at it for anything other than swing trading, currency futures, and indices, and index futures, and options. All right. So call me, email me, message me, text me about the coaching special. Let me know before Thursday. We can get you started ASAP. It is a good time of year to get going. Right after the holidays, things are going to be moving. We got our first Fed announcement in a couple of weeks, and what's going to be moving. So it's good time to trade because we have major economic news driving markets. So it pushes it, and whether long or short, something driving it, pushing it, all coming up even really soon. So let me know, and hopefully I can work with you guys and and get you up and running with us and join the coaching, the trading family. because the people who have been with me for a while have been with me for a while. And some of you I've known for probably 10 plus years also who have been working with me. Um, Time goes by quickly here, apparently. So I stopped aging a long time ago. So I don't know about y'all, but I went into to Benjamin Buttons mode and I aged backwards. So anyway, and if you train with me in jujitsu, um, even plus, I know some of you also work out with me in the past. Also, I've taken a class. All right, so I'll be in touch with you guys for I'll send the updates out a little bit later on today with the recording of this session, and I will see you unless you have any questions, email me or call me. Um, and I'm readily available anytime. And hopefully see you as also a coaching client. Hope to see you all soon. Okay, see you all in 2 weeks. Have a good day.